Welcome to today's edition of Toggle's Daily Video Insights. My name is Jan. I'm the CEO and co-founder of Toggle, and as is now already quite expected, we're going to take a look at another highlight from Toggle this morning. Today it'll be BUNGE. If you like these insights, subscribe to our YouTube channel. We do them every trading day, and so you can get a steady diet of these on your screen as you look around for new ideas. The reason why we focus on BUNGE today is that Toggle, as you can see here, this is the asset overview screen within Toggle, has been steadily bullish on BUNGE. In fact, the last time when we wrote about it in the daily brief, which was somewhere around early December, it suggested that the stock could reach just around 80. We topped out around that level, and actually we had just received a new insight highlighting further price pressure, positive price pressure recently, and so this is what we're going to take a look at today. As you already know, in the chart you're able to see what the target is, in this case 96.79, and the stop loss at 68.80. Clicking on this will take us into the article itself, and so we can take a look exactly what's going on here. Toggle is highlighting that the PE has reached a level that in the past has preceded quite a meaningful rally. In fact, having looked at 11 similar occasions, the subsequent rally reached 24.1% over the following 6 months in at least half the cases. So this is the median rise, which means that, again, looking at the confidence interval, it could potentially rise quite a bit more given this historical precedent. But again, the red line is suggesting that if you were to dip substantially below this confidence interval, 68.60 is the level in this case, it's worth reviewing the thesis and seeing whether or not this is a good place to put a stop level. Now, why it might move, let's take a look at some of these other cases where BUNGE was trading at the similar PE levels, and you can see that other than in most recent history, we can go back to 2012 or even as far as the global financial crisis or in the aftermath of the dot-com bubble. These periods of valuation didn't persist very long. Eventually the stock recovered in the financial crisis actually quite substantially, but just visually you can inspect the chart and see that these levels typically coincided with meaningful rallies in the stock, and this is what Toggle is highlighting this time. Looking at the back test, we can also see the risk reward, and this is why it's very important to look at and be very, very rigorous with the stop losses, that on the few occasions where this paradigm did not hold, the stock did dive another between 30 and 40%, and so respecting those limits is very important. However, the upside is certainly tremendous in this case, reaching again as high as 40%. The bottom line on this particular insight is that it's definitely worth taking a look to see how it fits with your fundamental view. If you think that this is something that belongs in your portfolio, then Toggle suggesting that the valuation could be quite attractive at these levels. In the daily brief today, we also discuss what the yield curve moves this week are telling us and how to interpret them, what it might mean for the stock market. It should already be in your mailbox. If it isn't, come to toggle.global. You can sign up and also test drive the Toggle Copilot. Thanks for your attention, and we'll see you again.